I'm Mike Loengart with E-Trade Financial with a market update through March. It was March Madness on and off the basketball court last month. Stocks pulled back and there was no shortage of causes, including what seemed to be a hawkish tone from the Fed as it announced the first of what officials indicate will be 3 rate hikes in 2018. Geopolitical concerns ranging from domestic political issues to global events such as Russian spying allegations. The Trump administration's announcement of tariffs on imports from China and fears of a trade war. And finally, Facebook coming under pressure for lapses in handling user data. Throughout this volatility, though, economic and market fundamentals remained resilient. International markets, both emerging and developed, struggled but held up relative to U.S. stocks. Bond yields increased modestly month over month, but the Treasury yield curve flattened. After the Fed announcement to raise short-term borrowing rates, the front end of the curve increased, yields on longer-term bonds fell slightly. So the bottom line, volatility continues and could be becoming the norm in 2018. March showed us once again how hard it can be to time the markets, as stocks rebounded from their early February decline only to slide back down again. Currently, U.S. stocks are trading at levels similar to where they started the year, even with the elevated volatility over the last 2 months. In our view, that is another argument in favor of staying the course. In spite of the volatility, and perhaps because of it, market opportunities persist. If investors liked U.S. stocks at the start of the year, they look even more attractive now with better valuations. Prices have dropped, but earnings forecasts have continued to rise. The case for international equity investing remains intact as well, as global growth continues to build steam. And bonds are down but not out. Rates aren't climbing across the maturity spectrum, but where they have risen, so too have the opportunities for investors seeking income. Thanks again for watching, and we'll see you next month.